Let's, at this juncture, invite our market master for the day, Gautam Trivedi, Managing Director and CEO of Religare Capital Markets, joins us as promised. Morning, Gautam. Good to have you with us. We have been in this trading range of 8,200, 8,400 and 400 thereabouts for a goodish bit now. Are you getting a sense that we might get some, negativity at all, or do you think the markets are more likely to break on the upside, what with the winter session on the anvil?
I think there is a lot of expectation from the winter session. You're absolutely right. The domestic mutual funds, as you know, have been net sellers already this month. We've seen over 5,000 crores of selling that's already come through. So I think that obviously is a cause of concern, and they're less bullish on the market than the foreigners are. But the FIs have pumped in already $1.2 billion this month. So my view pretty much is that the FIs continue to dominate the market, and their view is, and I guess based on where they're physically sitting, they find India the most attractive among all of the emerging markets, and hence I think money flow will continue, and with the winter session, the market could potentially break new highs.
Okay. Gautam, hi, morning. So could you just throw some more color on what the market is expecting from the winter session? Is it just the passage of GST, or are there other issues like the insurance bill, etc., which if it comes through could be a trigger on the upside?
Yeah, I think the insurance bill for sure, and I think a host of other measures which the government had spoken about at the time of the elections, of course, but we haven't seen a lot of them come through as yet. And frankly, I think a lot of people are patient, are waiting for the government to get its hands dirty with respect to what the issues really are on the ground before announcing any major economic policies. So I think the government is working around the clock, as we all know. Ministers are working 24/7 to figure out how they can push through reforms, and I hope that by the time the session in Delhi starts, we get a better sense of what are the key reforms that they will try and push through in this session. But the expectations are, I think, mild. They're not necessarily very high as yet. The big focus, of course, is on the rate cut, and as to when that will happen.
Okay, well, let's start with the current result season. Gautam, net, were you more disappointed?
I think the expectations weren't that high in the first place.
Okay.
Yes, the numbers were not great, clearly. Even the Sensex ex-oil sales growth was a mere 3%. Obviously not a great number, but I think we all know that the situation on the ground hasn't dramatically improved as yet. It'll take some time, and I think people are patient. And frankly, I think first or second quarter of the next fiscal is when people believe they'll see the first signs of improvement on the ground.
Okay. You have your house has raised their target price on Tata Motors, and the stock is, the biggest index gainer this morning. For someone who has perhaps not been a part of this rally in Tata Motors, is it too late to enter now, or do you think for a longer term it's still a good buy?
I think it's a great long-term story, and it's never too late. I wouldn't say never too late, but it's definitely not late in the case of Tata Motors.
Okay. Among the banks, do you like SBI after the numbers?
Yes, we do. I think the numbers surprised all of us, the whole street, and I think there will be incremental buying coming through in SBI. SBI remains by far the most the most powerful and the best PSU bank. So while the others don't look so great, I think people are focused very much on buying SBI on dips.
Okay. Then we come to the mid-cap stocks. Actually, there, of course, there has been a variety of performance. Let's take the auto ancillaries, which has been everyone's favorite, whether it's tire stocks or whether it's the Bharat Forges and the Motherson Sumis. Any of these stocks you think are now too expensive?
I don't think so, because, and this is a question that you may ask me about the whole market as such, not just limited to mid-caps or not just limited to auto ancs. And I think the bigger question really is that are we truly in a bull market? Our house view really is that the market bottomed out in August of last year. And the Nifty alone is up 52%. It was at 5285 at the end of August of last year. So we are structurally in a bull market, and we are already 12 to 14 months into that bull market. So I would not hesitate to say that the market continues to remain attractive, and I think as earnings estimates for FY16 start to get upgraded, the market won't look that expensive.
Okay. You did mention that the market's eye is on when the RBI will cut rates. What are you expecting from this December 2nd policy itself? Do you expect any kind of dovish tones, given that we've had good progress as far as inflation is concerned?
I think the expectations from the government, from the RBI, have actually increased more so after the WPI print last week. So I think as a function of that, some people are expecting the cut to happen earlier than maybe first quarter of next year. Our view still remains it's probably more like first quarter of next year, but most people would be happy to see the RBI governor surprise us. So
if he didn't do anything like that on December 2nd, will the market really take it badly, or will it be a 10-minute negativity?
I don't know. I'm not sure if it's going to be 10 minutes or 10 seconds or 20 minutes. But yes, I think the expectation has built up, like I said, post the WPI and the CPI prints last week. But having said that, it's really his prerogative when he does it. But I think if he doesn't do it by the first quarter of next year, or even I'd say before the annual budget, then the market would be disappointed. Yes.
What are the chances growth doesn't pick up in the fourth quarter or even in the first quarter of next year?
I think they're pretty low, because if you look at inflation, and that's clearly been a big driver of how growth has gotten impacted over the past 5 to 6 years. And inflation coming down to where it is today, global commodity prices still looking extremely, extremely weak. Obviously, huge positive for our country, and clearly a big addition for people in terms of disposable income for people to spend more money. So I think our view clearly is that growth should start coming back by the first or second quarter of the next fiscal year.
How high are the chances of any major sell-off towards the end of the year, Gautam?
I don't see any signs of that happening at this point, because, like I said, foreigners continue to pump money into this market. They believe that India still stands the tallest among all of the other emerging markets. No point people want to put incrementally new money to work in, whether it's Russia, Brazil, Argentina. And hence, I think we will continue to attract the most among emerging markets. If you look at the year-to-date numbers, we've taken in over $15 billion of net FII investment. And that is the highest in Pan-Asia, including Japan. So clearly, foreigners like India over most of the other emerging markets.
Okay. Gautam, would you like to talk to us about some mid-cap companies that really surprised you? We got some very good numbers over the weekend from Britannia, for instance, and even smaller companies like Pratibha Industries, Anant Raj posted some good numbers. What stood out for you in the mid-cap pack?
I think Ashok Leyland was clearly a stock that stood out. The numbers were terrific. We already had a buy on the stock, and our analyst was so impressed that he actually raised his target price to 65, which is now the highest on the street. But I think that's one stock, it's one mid-cap stock that I would continue to recommend, and the one that really surprised the street and us.
Okay, you don't want to talk about any of the consumption stocks, say, where would you stand on the Titans, Britannias, I mean the entire range of consumption stocks, Jubilants?
See, I think there is still a lot of negativity around the urban consumption plays. And as much as people may talk about Jubilant, unfortunately the numbers, same-store sales were down 5.5%. That continues to remain a worry. And I think what Jubilant is doing, which is pretty smart, is expanding into Tier 2 and Tier 3 towns. For example, they opened recently in Gorakhpur in Uttar Pradesh. So I think these are very good long-term consumption stories, but and I would recommend people to buy them on dips. But I don't still see the turnaround in these stocks. That's probably a few quarters away.
All right. You want to ask something?
No, I just wanted one comment on ONGC from your end, Gautam. What would you like to hear from the management that could perhaps trigger the stock going ahead?
What would I like to hear from the management? I think some more color on what they think the next few quarters would hold in terms of the subsidy burden.
Oh, right.
The number this time was obviously higher than expected. I think that's really what it is.